We've got a fascinating story to kick off our show, one that's been making waves in the world of cryptocurrency. It appears that someone has intentionally destroyed approximately 107 bitcoins by sending them to a burn address, a type of wallet that is designed to be unspendable. Now, for those who may not be familiar with the concept, a burn address is essentially a black hole for cryptocurrencies. Once coins are sent to this type of address, they are permanently removed from circulation and can never be recovered. It's a bit like throwing cash into a fire. It's gone forever. The interesting thing about this particular incident is that the sender has chosen to remain anonymous, leaving many in the crypto community scratching their heads as to why someone would deliberately destroy such a large amount of value. Some have speculated that it could be a publicity stunt, while others believe it may be a genuine attempt to reduce the circulating supply of Bitcoin and potentially increase its value. We've also seen some creative theories emerge, ranging from tax loss harvesting to religious motivations, and even the possibility of an AI-driven trading system gone wrong. While we may never know the true reason behind this move, it's certainly sparked an interesting debate about the nature of cryptocurrency and the motivations of those who use it. It's worth noting that this isn't the first time someone has destroyed a large amount of Bitcoin in this way. In fact, thousands of coins have been deliberately burned over the years, often as part of proof-of-burn mechanisms or other experiments. As we continue to explore the world of cryptocurrency and its many complexities, it's clear that there are still many unanswered questions about the motivations and actions of those involved. One thing is certain, however, this incident has highlighted the intriguing and sometimes mysterious nature of the crypto space. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into our middle segment today, where we explore the latest developments in the business and finance world. Our story for this segment revolves around two significant news pieces that caught our attention. Firstly, let's look at the rail industry, particularly focusing on a proposed merger between two major players. The application for this merger has been under scrutiny due to concerns over reduced competitive options for shippers and increased concentration across key freight corridors. Critics argue that such consolidation could lead to higher costs for consumers and negatively impact supply chains. On the other hand, proponents of the merger suggest it could bring about efficiencies and improve services through combined resources and expertise. However, as the review process continues, regulators are tasked with weighing these potential benefits against the risks of decreased competition and increased market dominance by a single entity. In another vein, we also saw updates from companies like CN, which continues to emphasize its commitment to safe transportation and sustainable trade practices across North America. Their extensive rail network plays a crucial role in connecting different regions and facilitating the exchange of goods, underscoring the importance of rail transport in supporting economic activities. As these stories unfold, it's clear that the balance between competition, innovation, and regulation will be key factors influencing the future landscape of industries like rail transportation. Welcome back to the Riskwiser Zone. We're wrapping up today's episode with a look at some recent developments in the world of finance. Sandfire Resources America Inc. has announced that it has entered into a sixth variation agreement to its bridge loan agreement, increasing the amount available to be borrowed from $59.5 million to $65.3 million and extending the maturity date to December 31, 2026. This move is seen as a positive step for the company as it works towards a final investment decision on its Black Butte copper project in Montana. The project has the potential to contribute significantly to the U.S.'s domestic supply of copper, a critical mineral essential for meeting the country's growing infrastructure demands. However, as with any investment, there are risks involved, and investors should be cautious when considering putting their money into this or any other venture. It's also worth noting that RBC has recently topped expectations and hiked its dividend after profits rose across the board, a promising sign for the banking sector. Meanwhile, Canada is being urged to take advantage of a $500 billion opportunity by acting more like the US, according to comments made by Jim Balsillie. As we close out today's episode, it's clear that there are both opportunities and risks on the horizon for investors. As always, it's essential to do your research, stay informed, and make decisions based on careful consideration of the facts. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.